pre-opening. So that will be one of the stocks in the broader markets to look at very closely. But here's the first take on the index. It's not bad. The Nifty is at that 19,450 mark, up almost about 40 odd points, 32 points actually to be precise. Sensex also in the green at the moment. Let's take a look at the top movers. The Nifty Bank is flat with a bit of a positive bias. There's a little bit of an underperformance there, but the mid-cap index is doing pretty well, up almost about 0.5%. As I said, because of the fall that we've seen in crude prices, you've had paint companies do well. HPCL is up in the green at the moment. Some of these NBFCs like Bajaj Finserv are also trending in the green right now. Grasim, UPL and IndusInd Bank are a couple of other names that are in the green as we speak. Let's take a look at some of the losers. At the moment, you just have Indigo, which is under a bit of pressure from the broader market losers. But apart from that as well, there you have it, down almost about 0.7%. Banks, by the way, are supporting the market this morning, especially PSU banks, PNB, Bank of Baroda, all in the green. SBI has been gaining slow and steady after its numbers, 0.4% higher, while Axis Bank is also in the green right now. HDFC Bank is the only one that's bucking the trend this morning, down about 0.3%. But otherwise, not a bad opening at all. Nifty now holding above that 19,400 mark, so gotten above the 20-day moving average. Important to see if it holds that level today.
Well, that's right, Sonia. But plenty of stocks actually from the broader markets that are moving around. Yatat Hospitals, those numbers look good. That stock has taken off. Prince Pipes, those numbers as well look good out there. Good operational performance is what we said, and the street likes it. So that's another one that's moving around from the broader markets. You have Skipper as well, that's moving up. The numbers look quite good. Stock is up close to around 6% as we speak. So those are about positive earning reactions. On the flip side, Idea Forge, remember when that company listed, we saw a lot of interest out there. It had a blockbuster listing as well. But that one, I think, post its numbers, it's pulled back. And the last time I checked, I think it was down close to around 10%. So Idea Forge should come up for you. Now down close to around 6%. It's corrected big time from the day of listing. You have a couple of other notable movers as well. Mishra Dhatu, Midani. For the last quarter, it's a weak quarter normally. We've seen quarter 4 and as well as quarter 3 when the revenues spike up. But out there, the margins got compressed. So Mishra Dhatu should come up for you on the screen. Midani, that's the stock that we're talking about. That's down as well in trade. And Rain Industries as well is selling off a little bit. So that's about some of the top movers in terms of positive and negative reactions on stocks.
Nigel, so it's a upstart. So 12 points or so is what we have, 19,420 on the index. Just a few other names before we move forward. HPCL, I just want to quickly highlight that one went up 6% yesterday. It's up another 5%. Last week on Friday during the editors roundtable, when you had looked at earnings, biggest changes to FY25 earnings estimates over the last 1 month. On my list, at least IOC came up. HPCL, of course, reported after. IOC is already up 10% this week. HP is up now with today's gain 10-12% as well. There is, of course, with HPCL, the lubes business, which they've been talking about kind of divesting it. They, of course, need a lot of approvals, etc. for it, but that is the other one which is at play. I think Deepak Nitrite, we mentioned 2.5 higher. Apollo Tyres is up about 3%. BSE continues to charge up. BSE crossed that 2,000 rupee mark yesterday, big 7-8% move. It's up another 2.5-3%. So this is in the hands of very strong momentum now, BSE. Varun Beverages has seen some earnings upgrades to 24 and 25 numbers. It's up 2.5%. There is Prestige, which is up 4.5%. We will hear from the management coming up in about 30 minutes or so from now. Yatharth, Sonia mentioned, 7.5% higher. Angel One is up about 3%. Prince Pipe has got a 6% move on very strong volumes right now. Newland Laboratories is up 4%, just highlighting things with volumes, not going down the list. And Schneider is another one which is up about 4% or so. On the downside, I saw Idea Forge. Idea Forge was down 7%. It's down 6 now. So there's but that's still a sharp cut coming through on Idea Forge. It's anyway not. It's been a bit of a disaster stock price performance-wise since listing. 820 on Idea Forge, and it's got decent-sized volumes for this point in the day. Rain Industries, Mishra Dhatu, that is down about 4%. So Himmat Singh Ka seed is coming up with a 6% cut. But again, you kind of need to wait and look at volumes before sort of taking a call on what this is going to do from here on. But all in all, I think we're up about 7 or 8 points, 19,414. But market breadth is almost 3:1 in favor of advances. Nilesh Shah is a market master of the day. He's managing director at Kotak Mahindra Asset Management Company. He's with us here in our studios. Nilesh bhai, great to have you with us here. Thank you very much. And looking at you in all your finery, we are feeling, serious FOMO.
I definitely am. I'm like, if Nilesh was coming dressed up for Diwali, I should have done the same.
If you had known, 100%. So, but thank you very much for dropping by.
I'm trying to represent the festival season in the market.
Very much needed, and absolutely. Nilesh bhai, how is the market looking? I mean, how's the earnings season been? Let's, I put out a piece on Friday which kind of showed that out of the top 200 companies, about 60% of companies actually have seen some downgrades. I mean, nothing large or major, but it's not. It should be the other way around. 60% should see upgrades, but that's not happening yet as yet. Go on.
So one, Indian market is not like Australian cricket team yesterday when they were down 7 wickets and we need Glenn Maxwell to pull a miracle. We are like our Indian cricket team. We were winning 8-0. Now, what more you can deliver on those expectations? And which is why some marginal adjustments are happening. But frankly speaking, today when we go and meet corporates, small, medium, large, everyone is looking at future with a lot of positivity. Their leverage is low, their turnover is up, the capacity utilization is 75% plus. Everyone is now looking to invest, looking to expand capacity. Frankly speaking, we are living in an era where experience is becoming a liability. We have been hit in the market so many times that you don't want to accept all the good things at face value. And your suspicious nature is pulling you to figure out what is wrong, what is wrong, what is wrong. Kuch to garbar hoga. But actually, it's just working out so nicely.
Okay. Nilesh, first of all, happy Diwali to you, and hope this is another prosperous year for you, your team, your family and everyone involved. More important is health, right? Prosperity health-wise, more than wealth. But I wanted to ask you a little bit about how retail investors should approach the year to come, because there are some headwinds on the horizon, whether you talk about geopolitical issues, whether you talk about what's happening across the globe. Do you think any of that would get to our market or not? You think it's going to be a pretty smooth run from here on?
So you should never say never. But our biggest bugbear was oil. And with geopolitical tension in Middle East, it was expected that it will go into triple digits. Today it is down to around 80s, 85s. I mean, who would have expected that US will lift sanctions on Venezuela? Venezuela has more oil reserve than Saudi, and they are producing probably 5 to 7% of Saudi's oil production. Now, it makes sense for Saudi to keep oil prices under control rather than run away. Straightway, India benefits. So, I'm seeing this kind of interventions happening, which is removing our challenges. Some time back, we were worried about monsoon because August was dry. In September, rains recovered. Now, it hasn't reached to above average, but from deficiency of double digit, we are in mid-single digit deficiency. So in the market, you should never say never. But truly right now, large caps are at historical valuations. Small caps are at 20% premium. So bearing valuation concern, which one can debate about, I think on growth there is consensus, on corporate health there is consensus. So my recommendation to retail investor, just stay invested. And if at all there is a correction for some unknown event, grab it as an opportunity to build your equity portfolio.
Well, hi Nilesh, good to have you in the studio. And I always tell you I'm following that policy.
SIP.
SIP, I'm keeping it going. And
so, Nigel, now there is one beautiful definition of SIP. Sab ichha ki purti.
Amazing.
Did you come up with that?
No. It's all WhatsApp gyan.
I think Nilesh, you should put the SIP campaign, the Amphi campaign. I think it'll fit nicely.
Lovely. But we are keeping the faith and we're going according to that advice as well. But talking about markets, things are looking good. And as you just mentioned, from the broader markets, maybe the premium has gone up a little bit in comparison to the large cap names. So incremental money, where does it go? Would you put it more towards the large cap names? Because they have actually underperformed in this year so far.
So undoubtedly, there are many underperformers like large caps, private sector banks. But that is why they have become cheaper. In large cap companies, earnings growth momentum has not slowed down.
Right.
In private banking, earnings growth has been fairly good. So we believe right now it is time to focus on valuation. And if you buy below average valuations, the chances of you making money will be far better. Undoubtedly, small and mid caps have done exceptionally well, and many of those companies have delivered also good results. But at this valuation, probably they will need to halt a little bit so that there is a time correction when earnings catch up with the fundamentals. So we are relatively choosy about valuation, trying to invest into, let's say, the bottom half of valuations rather than top half.
Which would get you to, I mean, if you were to kind of dissect that, not via large caps, mid caps, but sectorally, it'll get you to a lot of consumer names in that sense, right?
Absolutely.
Not staples, but there are lots of other
consumer
names.
Durables.
Yeah, beaten down, bombed out. Is there a place to look for opportunities? Are you seeing things happening there?
So normally we have seen ahead of election, governments puts money in the pockets of consumers. And there is a higher velocity of money due to spending. Now that should generally go to the bottom of pyramid. And they should be looking to spend money rather than save, unlike top of the pyramid. So both consumer staple and durable should have a better volume as well as margin growth in the run up to the elections and after that. And consumer durables have bombed out. They haven't really had a good run for some time. This festival season, there are green shoots visible. In fact, today's headline also talks about green shoots being visible. So our feeling is that it is time to accumulate consumer durable and select consumer staple and play for the election cycle.
Just to extend that point one step further, when you said you meet corporates and industry, they're all very optimistic about the future. But you hear this this feeling that the bottom of the pyramid is still, I mean, it's been actually down and out for a while now. Actually never really recovered in a big way post-COVID. So is that, how does that kind of fit in broadly?
So undoubtedly, Prashant, the bottom half of pyramid consumption is stayed, and that's reflected into mass market brands not doing as well as premium brand doing well. We believe this softness has continued for almost 18 months, and now hopefully there should be a bottom. Please be aware that we have been wrong for last 12 months expecting a bottom. The bottom has not yet happened. But we believe this festival season things could change. The early signs of sellings by e-commerce companies, selling by reduction in discount or full price merchandise getting sold, all are giving hope that this time hopefully bottom of the pyramid will participate in festival season as much as the top of the pyramid.
Okay. You know, this earnings season has been interesting, right? It's been a mixed bag, but largely a lot of the nifty heavyweights have done well, whether you look at SBI, L&T, Titan, Bajaj Auto, Maruti, across sectors. What has your preferred space been post-earnings, where you think there is both valuation and growth headroom?
So banking and financial services continue to remain the preferred bet. Their earnings momentum is positive. Of course, it will slow down in the days to come, but valuations have corrected quite sharply. The second broad theme which we have been looking at is capital goods. In the past, capital goods were sustained by the government infrastructure spending. Now we believe it is government plus PSUs plus private sector which will all come together. Now, some investments may get deferred after election, some may happen before election, but we see there is a big runway for capital expenditure to grow, and that should support capital goods company. One cherry on the cake is that many of these capital good companies are also becoming part of the global supply chain management through their parents or otherwise tie-ups. So they will cater to local market as well as global market. So between banking and capital goods, I think we are finding a lot of opportunities.
Banking and capital goods. One more sector I wanted to discuss with you was EVs, because you know now with so much pollution, I mean people are really taking concrete steps in sustainable energy, or whether it's renewable energy or even electric vehicles, right, for that matter. People are sitting up and taking notice that listen, it's affecting you and your health now, so let's take some steps. A lot of companies have been early adopters in this electrification space. Do you continue to bet on them, the likes of Tata Motors, etc., or do you now move outside the index as well?
So within the automobile sector, first is mass market versus premium. If you are at entry level car, you will sell for 5 lakh rupee and make 50,000. But if you are in SUV, you will sell for 25 lakh and make 2.5 lakh rupee. So premium brand over mass market is preferred. The second is that the future is EV stroke hybrid stroke hydrogen or maybe some other technology which we don't know about. Now, every company is trying to move into that space, and we'll have to really bet upon those companies which are going to be ahead of their peers. In two-wheeler electrics, we have seen some successes, many failures. In automobile, we are seeing different route being taken by different companies. Some are focusing on hybrid, some are focusing on EV, and who knows, someone may focus on hydrogen. So we'll have to really see how these technologies evolve. Today, jury is not yet out on whether EV is environmental friendly or not, because if your power is going to come from thermal side, you will shift pollution from cities to villages or to the coal mines. So we'll have to really see which company goes and invest into futures. In a very crude language, बचपन में जब हम लोग जाते थे एसटी स्टैंड के ऊपर तो हम रुमाल रखते थे जो बस जाएगी वहां पे बैठ जाएंगे. As a fund manager, we are also replicating the same. Rumal rakh rahe hai. Depending upon how those companies actually perform in the future, will be increasing our positions.
Okay. All right, Nilesh, always good hearing your thoughts. Thanks so much for coming down. And since we started off with cricket, I'm only worried that yesterday Australia made such a good comeback. I hope they don't get that momentum going for them. But do you think this cup is ours?
So, undoubtedly it is ours. Glenn Maxwell inning was fantastic, no doubt about it. But I just hope and pray it doesn't become like Kapil Dev's inning for Australia.
Yeah. Indeed, fire up the
one inning, now you have done, you should rest.
good his innings was with Afghanistan, right?
Absolutely. Now we should rest.
Yeah. Thanks, Nilesh. So hopefully the next time we chat, maybe the markets trend higher beyond the 20,000 odd mark, and India as well will be lifting the cup and we'll be saying Chakte India.
Amen.
All right. Thanks so much. Thank you. Well, let's move on then. Let's get another corporate on the show. We have Mr. Bangur, the chairman at Shree Cement, who joins us on the show. Hi, Mr. Bangur. Good morning and thanks so much for joining in. Well, your numbers looked pretty good, but I wanted a couple of details. When you give your sales number now, you don't break up the power segment, which is a smaller part of the business. Could you tell us how much did power contribute to the top line? Point number one. And how much of change was there in realizations, in the past quarter?
Our power sale is about 325 crore, to be exact 324 crore.
Okay. And
EBITDA in power will be around 8 to 9%. Ours is a high cost unit, 100% imported fuel. So only when the power is really high, we sell it. So our EBITDA on power is on average 8 to 9%.
Okay, all right. So what was the realization change then for the past quarter? If you could give us, a sense on that, and how much is it likely to go up by in quarter three? And also for volumes, earlier you were talking about outgrowing the market. So what should the volume growth look like for FY24 on prices as well as on volumes? Please go ahead, sir.
So first of all, volume will be increasing by about 12% in the whole year. First half it is higher by 14%, 13 to 14% in the first half. The second half will be little lower. So overall, the volume growth will be minimum 12%. It can be a little higher.
Okay.
That is one part.
Sure.
Realizations.
The realization this year compared to last year and last quarter is higher by 1 to 2%. In October month, compared to the July-September quarter average, our realization is higher by roughly 200 rupees a ton on an all-India basis. Somewhere it can be little higher, somewhere it is little lower. Overall, 150 to 250 we can say.
Okay, 150 to 250, got it. Mr. Bangur, good morning and thanks for joining in, and greetings of the festive season to you and your entire team at Shree Cement. Just want to understand a little bit about the demand trends. What are the demand trends looking like now as we head into election season as well? And where are you seeing the maximum amount of demand coming from?
Demand is, why I was saying that the second half will be lower, because our capacity will be full. Last month also, we dispatched 31 lakh tons, 1 lakh ton per month, per day on an average. And
oops, okay, I think we have some issue with that video. We'll just go back to Mr. Bangur in a bit, talking about how the capacity at Shree Cement is full. So Of course, demand is very strong, but they're looking to raise their capacity as well. Overall, volume growth will be higher than 12%, is the comment that he made. Just before he gets back on board, wanted to take a quick check on what's happening with the market. The indices are all in the green. The mid-cap index is actually up 0.7%, so looking pretty strong there. The small-cap index is also well in the green at the moment, and lots of individual stocks are having a strong run. The entire tire space, the paint space, all looking very good this morning because of the fall that we've seen in crude prices. So Apollo Tyres, Berger Paints, Asian Paints, Kansai Nerolac, all in the green at the moment. Of course, look at that. Apollo Tyres, very strong numbers. The operational performance has been solid, but the other stocks are also moving in the direction of, the green side. So Asian Paints, etc., Berger, all in the green at the moment. So that is one space because of the fall that we've seen in crude prices is looking pretty good. But we'll try and establish a connection with Mr. Bangur yet again. Mr. Bangur, if my voice is reaching you, I was asking you about your demand trends and you were telling me that capacity is a constraint right now. So what will your capacity be after the expansion post, say, FY25? How much are you looking to rise it to, sir? And, once the capacity, fresh capacity comes on stream, what kind of growth are you factoring in?
Our capacity at present is 50 million ton. By the end of this year, financial year 24, it is expected to be 56, or it will be 56 as the projects are almost being completed. Next year, it is about 62. So in the next 2 years, 12 million ton of capacity is being added.
Okay, so you're saying 12 million tons of capacity will be added in the next 2 years. What would that do to your, once it comes on stream, right? I'm sure you're expecting a growth on the top line as well as on the EBITDA per ton. Currently, I understand that you have around 1,000 rupees per ton, 1,060 thereabouts per ton. How much can you add on to that incrementally over the next 2 years?
Regarding EBITDA, I really never comment because it is a factor of cost as well as the sales price. And nobody knows the sales price can predict the sales price. So EBITDA is too much to comment. But generally the demand will be good. EBITDA will be expected to be higher from here. I will not like to give it a number.
Oh, but that's good enough for us. EBITDA will be higher from here. That's good news. And just to clarify, sir, realizations as of October average are 150 to 200 rupees better than the average of Q2?
The last quarter, July-September quarter.
Got it. Okay. A couple of more questions. Now, premium products as a percentage, I recall, we had a chat at your Rajasthan unit as well, and you said there will be a focus out there, but you're looking to increase the contribution of premium products. You have done that. Where do you see it end at the end of this year as a percentage of your trade sales?
Right now, it is around 9.5%.
Yes.
By the last month, it will be around 10.5%. We are growing gradually because in the premium products, we don't want to dilute the price. So the volumes will come naturally. We are only focusing on the right quality, right price. Volumes the market will give us maybe a little late.
Okay.
Our focus is on the right price.
Got it. So by the end of this year, it will go to around 10.5%, so 100 basis points higher than what it was.
Right.
Okay. You have told us about your capacity going up, Mr. Bangur, but you got Mr. Neeraj on board as well, and maybe there would be some focus on inorganic growth. Have you heard about any asset being on the block as of now, and are you interested? In the past, there have been various reports that suggested that Shree Cement is looking at inorganic growth, but nothing really has been closed out in the recent past.
No, Shree Cement is not looking at inorganic growth. From
not at all, sir?
50, not at all, unless it is really good. So normally we will like to concentrate on our own working. From 50 to 80 we have to reach in 4 years. So 62 in 2 years, then we will like to reach up to 80 or so in 2 to 3 years further.
And so all of that will be organic?
All of it will be organic.
All right, just one more question, sir. If you're not looking, but some of these companies that would like to sell, they would approach a big name like you, right? Shree Cement. So have you seen any of these assets on the block? There are various rumors that there's a company in South India, in the West, even in the North. Any large size deal? Yeah.
some proposals have come. It will not be fair to name any of them. Only thing I can say is that we will not be looking at any of them at present.
Okay, so not looking at any, unequivocally saying that you're not looking at any inorganic acquisition at the moment. Got it. We take that point on board. I just had one question. You said that there's a 12% growth in volumes that you're looking at for FY24, but in the next 2 years, you have 12 million tons capacity that will be added. So could you replicate this 12-13% growth even in FY25, or is it a possibility that you could do better than that?
When I say minimum, I say minimum. So, of course, it can be better than that, but 12% is the growth will be the minimum growth, I am saying.
Okay, for FY25 as well, right? That's a fair assumption.
Yes, yeah, this is a fair assumption.
All right.
All right, just one more point, sir. You know, there was that IT survey that made investors very, very nervous. Any outcome out there?
Till now, no progress is there. The things are lying where it was in the last quarter.
Okay, all right, Mr. Bangur, always a pleasure talking to you. Thanks so much for joining us here on CNBC-TV18. You're telling us the EBITDA per ton will look better from here on, and volume growth at least of around 12%. Also clarifying that you're not looking at inorganic growth as of now. That could be select assets that could be probably on the block. For the time being, we slip into a short break. You come back, we'll focus on Prestige Estates. The management join us to tell us about the past quarter's numbers.
Welcome back to Bazaar. Well, let's focus on Prestige now. The company reported a good set of Q2 numbers. The Q2 pre-sales doubled and the sales volume zoomed by 50%. In fact, the company registered record-breaking highest sales in the first half of FY24. So let's get just a sense of which way things are headed. Of course, we have the management, Irfan Razak, the chairman and managing director at Prestige Group. Mr. Razak, good morning and greetings of the season to you and your team. I know we spoke just a while back about your operational updates as well, but now that the first half is behind us, just wanted to understand what will FY25 look like? We have a fair idea of which way FY24 is expected to go, but what are the numbers looking like in FY25 and what is the pipeline?
We're going straight away to FY25. Yeah. I think let's end FY24 first. Like I said, we are looking, the next 6 months is also very strong. We have a lot of launches planned for this next 6 months in all the cities that we are present in. That will actually boost our numbers. And like I previously said, we are targeting a number of 20,000 top line on pre-sales. And I think the teams are working hard towards it. Now, what does FY25 look like? That's actually a very valid point, because we always have to look ahead. And I believe that there'll still be growth, and we are going to get stronger, and we are also adding up a couple of cities. So that will also add up to the top line. So we are quite positive on the way things are going. We are not only looking at pre-sales, we're also looking at delivery, because that's the most important, which I believe will give us that impetus for future. So in FY25, we'll be having a lot of deliveries that we had launched in the previous years, and that will also give confidence to the customers that yes, has delivered, which is the most important thing according to me.
But can you just break it up for us? You're saying that 20,000 crore top line on pre-sales is what you are targeting by FY24. But, to achieve a number like that in FY25, how many projects will be commercialized in the second half of the year? And you're saying you're fulfilling a lot of the earlier projects as well. Can you just give us a breakup of what one can expect in terms of commercialization of projects in FY25?
See, now, if you're looking at FY25, we have a strong pipeline. We have a strong pipeline again in Bangalore, in cities like Hyderabad. We just picked up some land in Budwell in a government auction. That's also a 27-acre land. We've paid for it. And then we have some good premium locations in Hyderabad as well as in Mumbai now. Mumbai, we've got the launch of, which will happen in FY24. But that will spill over to FY25 also, which is the Ocean Towers as well as Prestige Nautilus. Now, these two are very much there. And then we've also got the Prestige Forest Hills, which we haven't yet launched in the Prestige City in Mulund, because the first two phases are going into fruition. Like in FY25, our target is to complete the Siesta Tower and the Prestige City. FY26 is to try and see that we complete Belenza and the Prestige City, and at the same time launch the Forest Hills in FY25. So there's a lot happening, and we are looking at cities like Pune, Goa, NCR, and that will also add to the top line. Of course, Chennai is also there. Chennai is definitely going to add a lot to the kitty. So that's there's a large project which is almost ready. As soon as the approvals come, even that will come up for launch. So all in all, I believe that there is a lot of traction, and I believe there's a lot of opportunity. And only thing is we have to do it right, we have to do it properly, and we have to price our product also correctly.
Sure. You mentioned that there are some good premium locations in places like Hyderabad that you're targeting. Would this mean that you can better your realizations? Because your realizations have improved. I mean, it's at a multi-quarter high. Now you're sitting in average realizations around 10,000, almost 10,370 rupees per square foot. Is there scope to improve it further in the quarters to come?
See, the 10,300 is a blend of the various cities that we operate in. Like Mumbai gives me a much higher realization than a Hyderabad, or now, of course, Bangalore has in most of the locations, it's touching the 10,000 mark. So I mean, it's a question of not increasing the price just unilaterally and for the sake of increasing. We have to have a eye on the bottom line while we do that, but at the same time, not get too greedy and increase the prices, which will be counterproductive. I've said this before, I'm saying this again. We have to balance the price. At the same time, we have to see that the company's bottom line is also properly protected, and we do proper justified business.
So I'll come back to the numbers in the residential space in a bit, but in the commercial space also you've completed projects of almost 40 million square feet, and you have some ongoing projects of 24 million square feet. Can you tell me what could the exit rentals look like for you? What is the kind of annuity income you're looking at by the end of FY24 and 25, and what would this growth be?
Now, currently, we have an exit rental of about almost 250, 300 crores, 300 crores, I think. Now, that by FY28, whatever we are doing in the various cities, we believe it's going to touch 3,000 plus. There's a complete worksheet. Now, it's impossible for me to spell all of it on this show. But the target is that by FY28, we should have a top line of more than 3,000 crores on rentals. And we have to also add to it the retail mall portfolio. We have a strong portfolio on the mall side. We have now three operating malls, of course, two large, one in Bangalore, which is South Bangalore Mall, and the other is the Kochi Mall. But then we have a strong pipeline of many more malls under construction. And even that will add up to about 500 to 700 crores by 28.
And what is, okay, so 3,000 crores rental annually is what you're expecting by FY28. That's the top line there. But what is the occupancy like in Q2, and what are you planning to end the year with in your in the hospitality space?
Hospitality is doing well. Now you just asked me what is my occupancy in the commercial space. Occupancy is actually excellent. It's in the high 90s. And we believe that whatever space that is getting leased out, completed, will get leased out. Like we have recently leased out a building that we were constructing in Pune. That was a one-off building that we did in Pune, and almost 1 million square feet, and we've leased the whole single building to Bank of New York Mellon. So that's a great deal that we've done. Similarly, we are in whichever city we are working in, we have got our tenants. It's only because of the location and the quality of the product. And that we believe we need to keep on upping our game and making our product better and better so that the occupiers come to us rather than anywhere else. So that's the plan that we have. And on the hospitality side, yes, the hospitality is buzzing. Hospitality, our post-COVID has been doing extremely well. We have 60% plus occupancy in most of the assets that we have.
Right.
The existing assets are trading very well. Future assets are under construction.
Mr. Razak, it's always a pleasure speaking with you, sir. Thank you very much for joining us, and good luck to you, and wishing you, if you don't speak again, a very happy Diwali to you, your family, your team, from all of us here. Thank you very much for joining us. Well, Hitachi Energy is the next company we're speaking with. It was a mixed set for the second quarter. So there was a 10% top-line growth, but down the line, things don't look all that well. There has been a bit of compression if you look at EBITDA, profits, etc. We have Mr. N. Venu, Managing Director and Chief Executive Officer at the company, joining in to take some questions. Mr. Venu, good morning. Great to have you here. Prashant this side. If you can just contextualize these numbers, what happened in Q2, and just give us a sense of the business. I mean, the three growth drivers for you, transmission, electrification, and renewables. How's traction in these three segments, and what's really going on? Go on.
Yeah. Thanks, Prashant. Good morning, and thank you for having me here in your show. And Q2, if you really look at our Q2, let me decode our results. Our orders, we had a very high orders, almost 50% increase in orders sequentially, and 36% increase in orders by unwind. And we also have a very good orders pipeline across the sectors, not only transmission and renewable, but also rail and other segments have contributed this high order growth in that. And resulting this is that we had a very all-time high order backlog of 7,500.
Right. Mr. Venu, we have the numbers. If you can explain to us qualitatively what is happening, because we have all the numbers. Is there execution issue still? You're not able to execute as you would like to? Go on. Yeah.
I'm coming over there. As we said, we have been having a challenges of supply chains, etc. previous quarters, and we continue to maintain that we are sequentially improving it. If you really look at our sequential performance, we have improved compared to previous quarters in that. That's how our improvement has coming, and our long-term demand drivers are intact, and our margin strategy, that is that by end of FY25 we want to get into double-digit EBITDA margin strategy is also well on track in that. So three things are playing at our thing. One is that our demand in the domestic market, our growth levers, which is exports and service, are also contributing this margin accretion sequentially over a period of time, and then that will eventually get us to 10% growth in that. And we're also saying that on the market standpoint, if the market is going X, we want to grow ahead in the market, and that has been also playing very well. And our strategy, give me another 30 seconds, our strategy of making in India for India and the rest of the world is really playing very well so far in that. we are continuously maintaining almost 1/4 of our orders as well as our revenue coming from the exports across the geographies in that.
All right. Hi, Mr. Venu. Good to see you in. Nigel on this side. Well, sir, you have outlined things, right? Order book is looking good. Supply chain issues are behind you. And you're saying, you know, you're going to outgrow the market. So that's good news. And that's what you've done actually in the past few years, though growth doesn't look that good. But you've actually outgrowing what your market, your industry is growing at. Now, tell us by the end of this year, what do you end up with in terms of growth? Will you grow in double digits for the year? You know, Mr. Venu, will you grow in double digits for the year? For the first half, you've grown by close to around 8%. And your margins have been in the vicinity of around 5%. So will the second half of the year be much better? Can you grow in double digits for the year? Point number one. And can margins improve by, say, 100, 200 basis points? Because 10% is what you're targeting in 2025. So there'll have to be some improvement even in these quarters. Please go ahead.
Right. So thank you, Nigel. Good to see you again. So as I said, you know, sequentially we are improving it. Okay, we have a very good portfolio, and our order backlog is very robust. We are able to execute. Our customers are picking up our products, whether it's a product, system, services. There's a huge demand, and the supply chain constraints have eased. There is a bit of backlog. You know, we need to work on that. So, but having said that, you know, our strategy is to, you know, grow ahead in the market. And the second half, definitely we will endeavor to see that, you know, we grow in higher than the market in that. And once we increase our revenue, and naturally we get the margin accretion, that will also help to further improve in this second half of the year.
So, Mr. Venu, going by what you're saying, for the year you'll grow in double digits. Second half of the year will be better. First half you grew by 8%. So, double-digit growth for this year, is it on track? And margin improvement will come about with operating leverage. So can we see, have margins bottomed out? Do they move to around 7-8% for the second half of the year? Please go ahead.
I don't want to put any number there, Nigel. You know very well that all I'm saying is that, you know, we are improving it. We are growing higher in the market. And once we grow, then automatically the margin accretion will come into it, because we have a very nice portfolio, you know, mix of broad-based segments, and also both domestic and exports, as well as service. Digital should contribute for the margin accretion. Okay.
Well, you know, since you mentioned exports, I want to talk a little bit about that, sir. In Q2, your exports were at 25% of your overall order book, and the export orders went up quite a bit. I want to understand which are the geographies which are doing well for you, which are the segments which are doing well, and are you facing any slowdown? Because, you know, there are a lot of geopolitical tensions right now, especially in areas that you operate in the export market. Are you seeing any hit because of that?
Yeah, thank you, Sonia. I think, you know, the geopolitical challenge is extremely very big. All of us, we know that. But, you know, India is very well positioned in that standpoint. But our exports, as I have been telling you previously, is a three-pronged strategy. The first one is, you know, we have a certain global feeder factories where the product is in Hitachi Energy globally. We only manufacture in India, and then we sell all over the world. That's the number one. And the second one is we have certain allocated markets, and then where we go and develop the allocated markets together with the local organizations, and then we sell our products. And third one is they have the feeder factories where we make the components to sell it to the rest of the, you know, Hitachi Energy factories. So far we're not seeing, in fact, we are seeing a lot of, the pipeline is very robust in the export market. And, you know, as you know that we have set ourselves the target of 25% by 23. We have reached 1 year ahead of the curve. So right now we are stabilizing. We are in the range of 25-26% coming in that range. So there's a good pipeline at this point in time on the export projects.
So you'll stick to this target, right? 25% of your order book. You don't want to grow it further. Okay, no, got it.
Not that we don't want to grow further. We want to stabilize 25% and then take it up to the next level of growth.
Okay, got it. The other space I wanted to ask you about, which is really picking up now in the domestic market, is EV charging and this whole, you know, railway and metro space. You do have about, I think, 40% market share in railways already. What are the incremental orders that you're getting in there? Can you just quantify it for us? And also in EV charging, this entire space, this ecosystem, what is the kind of potential that you see?
Yeah. So, you know, the rail is one of our key growth segments. And, you know, if you really look at orders from this segment in the range of 15-16% ballpark coming from these rail segments alone. And the rail segment, the market is going up. And if you recall, to 1 quarter or 2 quarters back, I said I put it up around 5,000 to 6,000 crores as the total market for the rail, for our addressable market. Today, this market has gone up to 8,000 to 10,000 crores because we are coming up with Vande Bharat trains and the cross-country electrification, metro train projects, and 9,000 horsepower trains. So all those things, help our, our technology can help in those segments as well in that. So it's quite a big market, and the market is really growing much higher.
So this may seem a little tangential, Mr. Venu, but on the transmission side, last time also when you were here, you were saying that that's the market which will grow very very rapidly, right? But on the is exports and transmission work on the export side also a big opportunity? I mean, rebuilding efforts in a lot of countries. I've heard, by the way, from companies talking about the opportunity, for example, in Ukraine, as that country comes out of the conflict, and you would need a fair bit of rebuilding. I'm just, is there something you're looking at?
No, the energy transition and climate action plans are really bringing a lot of opportunities in the transmission segment, especially on the HVDC, power quality, STATCOMs. Those are the one. For example, in the last quarter, we have booked one large, high-powered STATCOM orders, a couple of 100 crores, and that's a example to show that how these renewables need this kind of technologies. And I've been also telling in your show that India as a country was requiring one HVDC project for every 4 to 5 years. Today the need is every year one project, which is almost 6,000 to 8,000 crores worth of project per year. So those are the projects are coming for bidding, and they are quite a large projects, and where our company has seen this, and we are invested in our factories expansions. In the last 1 year, we have inaugurated the 4 new greenfield projects, factories in catering to these kind of projects in that. And exports is also another opportunities where we are looking at it. Both our HVDC and the STATCOMs, the factories which we have set it up here, they are not only meant for domestic market but also for the export market.
Okay, all right. Mr. Venu, very quickly before we let you go, you're not giving us a guidance for the year, but you're giving directional outlook, so that's good. But tell us on the order book. The order inflows this year have been very, very strong. I think it's more than what you saw in the entire of last year. So what is the total order inflow you're looking at for this year? That's for FY24 by the time you wind up. And also you have bid for various orders, right? So what is the total bid size that you're looking at? I mean, what is the total size of projects that Hitachi has bid for? Please go ahead.
So again, the pipeline for us is very, very robust. The pipeline today, if I put it, is at least 50-60% more than what it used to be in the last year. So that tells you that, and our hit rate is quite high. It is in the range of 30 to 40%, depending upon the sector, segments, etc. So based on that, one can always make an assessment then where we're going to land it up. We are right now, our factories are getting full. So we are working with our customers, de-bottleneck some of those, issues of the delivery times, etc. But otherwise, the market is in a fantastic at this point in time, Nigel.
Okay. And you want to put a number, sir, to it?
Number.
What is the
number? The market is growing X. We want to grow much higher than X.
Okay. Well, the much higher can be anything, right? It can be 2x, 3x. It can also be 10x to the market. So that's what we're trying to get at. But I think your service contribution, right? You have a plan to get it to 15 to 16% in the next 3 to 4 years. Currently, your services contribution to the order book is in high single digits. Can you tell us what is the outlook for FY24 and FY25?
So we have now very close to the 10% mark of the service, because service, we have a huge, install base in India. We have been present last 75 years. We have quite a lot of install base. So we are now productizing this service offerings to our customers, including life expectancy, life enhancement of those things, and also digital service. Those are the things would get us from what we are now from 10% to 15% in the next 2-3 years time in that. And as you know, the services have better margins, and that would also help us in the margin accretion going forward.
Services and exports, I think both those two will be drivers as well going ahead. It's always good speaking to you, Mr. Venu. Maybe by the end of the third quarter, you'll give us some more concrete numbers. One number we have is you're going to be moving to double-digit margins by 2025. On the growth aspect, we'll have to see how execution is picking up. But all in all, thanks so much for joining in and filling us in with a fair sense about how the business.
Very happy Diwali to all of you. Happy Diwali.
Likewise. wishes to
Diwali.
you as well as your entire team, Mr. Venu. Thanks so much for joining in. Well, for the time being, though, we'll slip into a short break. On the other side, we'll focus on the commodity sector. Manisha Gupta is joining in.